What's up, crypto fam? Welcome back to Zacchy Crypto Update, your go-to channel for straight-to-the-point, actionable crypto insights without all the fluff. Today, we're diving deep into a token that's been making waves and not always in a good way, the Pi network. We need to talk about some serious red flags that are flashing right now, especially concerning its price. Let's get right into it. While Bitcoin is showing strength, hovering above $109,000, Pi network is facing immense pressure. As of today, May 26th, the Pi token is trading around 77 cents. Now for those of you who've been following, you know that's a massive drop. We're talking over 53% down from its monthly high of $1.6692 just on May 12th. This makes Pi one of the worst performing major coins in the recent past. This isn't just a slight dip, folks, this is a significant reversal, and it's putting Pi coin at a serious risk of a deeper dive. Why? Because we're seeing something crucial happening. Investors are moving a staggering 2 million Pi tokens onto exchanges. And believe me, when tokens move to exchanges, it usually means one thing: selling pressure. Now let's break down the technicals. I've been watching the 8-hour chart closely, and what we're seeing is a clear bearish signal. After that brief surge to $1.6692 on May 12th, Pi coin has been in a strong downtrend, now below the 50-period exponential moving average at 79.10 cents. But here's the kicker, and this is important for all you chart enthusiasts out there. Pi coin has formed what we call a bearish flag chart pattern. What is a bearish flag? Imagine a flagpole that's pointing downwards. That's the sharp crash we just saw. Then, the flag itself is a period where the price consolidates or moves slightly upwards within a narrow parallel channel. The critical point here is that Pi coin has already broken below the lower boundary of this flag formation. This is a classic confirmation of a bearish continuation. Based on this technical setup, we're looking at a high risk of Pi dropping to its May 17th low of 65.84 cents. And if that level doesn't hold, prepare for more downside, potentially hitting this month's absolute low of 55.45 cents. That's another 30% drop from current levels. Of course, a bullish invalidation of this pattern would be if Pi coin manages to break above 86 cents, which was last week's high. A move above that would signal some strength and could potentially push it towards the psychological $1 mark. But right now, the charts are screaming caution. Let's talk about those 2 million tokens moving to exchanges, because this is a fundamental red flag in crypto. We've got data from PiScan and it's painting a clear picture. In the last 24 hours alone, investors moved 4.1 million Pi coins into OKX, while only 2.2 million were withdrawn, resulting in a net inflow of 1.88 million. On BitGet, the net flow was 712,097 coins, and on PiNX, it was 2,176. Only MEXC and Gate.io saw net outflows in the past 24 hours, meaning more coins were withdrawn than deposited. When you add it all up, the total net inflows into exchanges stood at over 2.04 million tokens. Why is this a massive red flag? It's simple supply and demand, folks. When a significant amount of a cryptocurrency is moved from self-custody wallets, your personal wallets, to exchanges, it typically signals that holders are preparing to sell. They don't move their tokens to exchanges just to hold them there. They do it to liquidate them. This surge in supply on exchanges, especially when demand isn't keeping pace, inevitably puts downward pressure on the price. It tells us that for Pi coin, demand remains limited, especially after its recent crash. And if the technicals and exchange inflows weren't enough, we have another major factor at play that could exacerbate this price crash: massive token unlocks. This isn't just a one-off event, it's a continuous stream. Today, May 26th, nearly 10 million Pi coins are set to be unlocked, and it gets even bigger. Tomorrow, May 27th, we're looking at 12 million coins. The day after, May 28th, another 15.2 million. And on the 29th, 13.2 million. This means over 72 million Pi coins, valued at over $50 million at current prices, are coming onto the market just this week. And it doesn't stop there. Over the next 30 days, we're talking about a staggering 280 million Pi coins being unlocked. Now let's put this into perspective. Pi network currently has about 11.1 billion coins in circulation, but the circulation cap is a massive 100 billion. This unlock trend is going to continue for a while. What does this mean for the price? When such a large volume of new tokens enters the market, it creates significant selling pressure unless there's an equally massive surge in demand to absorb them. If demand doesn't match this increasing supply, the price will naturally be pushed down. It's basic economics. More supply, stagnant or declining demand, leads to a lower price. So what's the takeaway here for you, my viewers? First, if you're holding PiCoin, you need to be acutely aware of these bearish indicators. The combination of the bearish flag pattern, significant exchange inflows indicating selling intent, and a relentless schedule of token unlocks paints a very challenging picture for Pi's price in the short to medium term. Second, always remember that in crypto, information is power. Understanding these market dynamics rather than just relying on hype is crucial for making informed decisions. And on that note, a very important disclaimer. All content on Zacchy Crypto Update is for informational and educational purposes only, and should not be considered financial advice. Cryptocurrency investments are highly volatile and speculative, and you can lose your entire investment. Always do your own thorough research and consult with a qualified financial advisor before making any investment decisions. That's it for today's urgent Pi Network update. I hope this gave you a clear, no-nonsense breakdown of what's happening. If you found this valuable, smash that like button, subscribe to Zacchy Crypto Update, and hit the notification bell so you don't miss our next crucial analysis. Stay safe out there, and I'll catch you in the next video.